Hello, friends. Hope you all are at good health and staying indoors. So, to continue with our video on basic concept in accounting, we today are going to look into the tools of accounting. As you see on the screen, the toolbox. So, as we discussed that all the entries or book writing has to be done for the company. So, what are the tools in which we actually write those books or how we write those books? So in this, we are going to see the tools for accounting. So, what are these tools of accounting? So, as you see, there are tools like the journal book, ledger, trial balance, trading account, profit and loss account, and balance sheet. So, these are basically the tools through which accounts writing or bookkeeping is done in day to day business. So, today I'm going to take the first three tools, that is the journal book, ledger, and the trial balance. So let's start. So to start with, here we have the journal book. So what is journal book? In bookkeeping and accountancy, journal is a place where basic entry is recorded. So uh, since long or in early days, you can say, when the books were manually maintained, the entry, there was a first journal entry, and those entries were then posted in the different set of ledgers. So in current technical age, actually, when different softwares are being used to post the entries or to maintain the day-to-day books of accounts, the journal entry concept you will rarely find. Means you will not see the journal entry as such, but there are certain codes which are used to load the entries in books of accounts in the software. So how does a journal book looks? So here I have plotted one example. So in this example, you can see there is a Vardhaman and Company account and purchase account. So this transaction is basically a purchase of material transaction in a company. So a company has purchased some goods from Vardhaman and Company. So how the company will post the entry? So the entry will be purchase account debit to Vardhaman Company account. But how you will post? So this is the journal book. Here you can see the date column, the particulars column. In date column, you have to enter the date on which the transaction occurred or the date on the invoice or bill, or whenever you are posting the entry in the books of account, that is the date which you have to enter. Second is the particulars. So particulars is what transaction you want to record. What is a transaction? What is the nature of a transaction? So that is to be recorded in particulars. So JV number. What is JV number? Each and every entry which you book, you will have to have a specific entry number or a JV number, that is journal voucher number. And the same number will be reflected on the document on the basis of which you are entering this transaction. So there is a debit column and the credit column to enter the specific amounts related to the transaction. Below you will see in bracket a small description of the nature of transaction. So in this case we are purchasing material. So it is material purchase. So this is how a journal book is seen or it is maintained. So every day the accountant or the bookkeeper has to post the entries according to the transaction occurring on day-to-day basis. So there will be series of transactions. So this is just one example. Now, after the entry is done in journal book, it is then posted to the ledger book. So what is ledger book? Ledger book is basically different types of or chart of accounts which a organization has to maintain. Each person, each expense or each revenue or whatever transaction you do in day to day business of a company, each and every will have a separate ledger account having separate debit or credit entries. So all so just to inform you, all the balance sheet ledger basically will have a opening balance in the ledger account. But the ledger account related to profit and loss account or trading account will not have the opening balance, because profit and loss account and trading account are basically only for the current period of an organization. They don't show the they don't show the entries relating to past years. They only show the entries related to the current year. So the ledgers which are related to the trading account and profit and loss account will only have the current entries and the closing balance. But the balance sheet which shows the year on year accounts or year on year amounts of the different ledgers will have definitely an opening balance account. So if you start with new ledger, then it will not have opening balance, but the ledgers which are carry forward from last year to this year will definitely have a opening balance amount. This shows this means the ledger shows basically the overall summary of that account. Like there can be some debit entries, there can be some credit entries. So in a ledger account, basically you see what all transaction a company had during the year with that particular account. So it's a reflection of the summary, like total entries or total transaction during the year. The entries as mentioned in the journal entries are later on posted in the ledger as we use the account, like whatever account you use for posting that transaction or making that entry in the journal book, those will have separate ledgers. So there are different types of ledgers, and altogether there are many ledgers in a company. So the entry is then posted from journal book to the ledger. As we saw the journal book, now we will see how a ledger book looks like. Basically, this is a T format ledger book in which you can see again the date column, the particulars column, debit amount, date, particulars, and the credit amount. So there will be both debit or credit entries in any given ledger. So as we had an example of a purchase transaction in our journal book, I'm continuing with the same example. So in the transaction was basically for purchase of material from Vardhaman and company. So purchase. So this is a purchase account ledger. I will have to open for that one particular entry. Two ledgers come into picture. First is purchase account and second is Vardhaman and company account. So first we are looking into purchase account. So the entry was purchase account debit to Vardhaman and company. So purchase account basically is a debit amount. So here in the debit side, you will put the date of the transaction and you will write to Vardhaman and company account 1000. So again, if there is any other transaction with with Vardhaman or any other vendor of the company, the same entry will be again posted in this ledger. So there will be several entries throughout the month, throughout the year. And as you can see in the right hand side, there is by closing balance. Now here I'm taking the balance as on the end of the month, that is 30th June. So there will be by closing balance and that will be 1000 rupees in this particular example. Now, as I said, there will be two ledgers. So we will be having another ledger of Vardhaman and Company ledger account. So here, as you can see, there is a opening balance. So at the credit side, you see the date is 1st of April 2020 as the year of account in for bookkeeping starts from 1st of April and ends on 31st of March in the next year. So this is my vendor account, which is my purchase, like I purchase goods or material from this company. So I am doing transactions from years together And as you see, there is opening balance. By opening balance, BF, that is brought forward. So that amount is 2000. That means last year I had certain transactions with Vardhaman company and this 2000 rupees is yet to be paid. So we see an opening balance. Now, this year in the month of June, I had one more transaction with them of purchase, and that was on 15th of June. So, by purchase of rupees 1000. So now at the end of the month, that is on 30th June 2020, the balance goes to 3000 as we have opening balance of 2000 and current month transaction of 1000. So now the liability towards Vardhaman and Company goes to 3000. So this way each and every account, expense account, purchase account, sales account, different vendors account, different customers account, we will have to open different types of ledgers and we will have to post the entries in those particular ledgers. And we have at the end a complete set of ledgers for the transactions the business had in the year. Now we'll go to the trial balance. So what is trial balance? The list of balances, you can see various ledger accounts which the company has maintained. Now we'll have to collate it in one particular place to understand what all balances are there during the year. So this is basically a list of all my accounts and their balances during the year. So the amounts are basically noted or mentioned as debit and credit. So one thing you have to note here is all the accounts which I maintain will be having certain accounts will be having debit balance, certain accounts will be having credit balance. But at the end of the year, when I collate all the ledgers, the debit amount and the credit amount both should match. There will be no case when the trial balance will have a different amount in debit and different amount in credit. So it should match. If it is not matching, then there is some error. There is some balance error or we must have missed out some account. So there is a mismatch in trial balance. That should not happen. The trial balance will always match. Basically, trial balance is the base for my future financial reports, the further financial reports. What are my further financial reports? Those will be my trading account, my profit and loss account, and my balance sheet. So whatever chart of accounts or whatever balances in the ledger have you are having in the trial balance will go and sit either in trading account, profit and loss account, or balance sheet. So this is my first step or the base of further financial reporting. And this is a very important report, basically from the point of view of auditor or any person who wants to look into the financial reports of the company. Trial balance is a important tool or a base because on this the further reports are based. So today we looked into journal book, ledger book, and trial balance. So these are basically the tools for writing the entries or bookkeeping or account maintenance. So I hope you got a useful information from this PPT presentation. And as this is a PPT presentation, I have taken only one example to explain you. So you can go through the slides and if there are any doubts in your mind or you have any difficulties, you can come to. So now we'll go and see how a trial balance actually looks. A trial balance basically, as you can see on the screen, it has got a particular column. There is a debit column and a credit column. So here I have taken a different example as in our earlier example, there was only a purchase transaction. So here as you can see, there is a capital account, there is a purchase account, there is a sale account, there is a cash book and cash account and creditor account. Basically here, as we I had to match the trial balance, I have shown in this manner. So when the capital was invested, 1000 rupees were, or the cash inward was of 1000 rupees, then I purchased certain material of 1000 rupees. So my, so there is a liability of 1000 rupees in the form of Sunday creditors. Then I sold those goods at rupees 1500. So I've received the cash. So my cash becomes capital account 1000 and sale receipt 1500. So it is 2500. And as I purchase 1000 and I create a liability of 1000. So my trial balance matches at 3500. So this is the trial balance. I hope this was really helpful for you, and I would be glad to know from you your queries. If you have any doubts, any questions, you can put them in the descriptions and have the queries. We will definitely solve. We will definitely try to solve your queries. And also, I request all to tell me your views on this video. Also tell me if you want me to cover any particular topic in accounting, not only in basic accounting, any other accounting topics which you want me to cover. I will be really happy to understand from you and share some PPTs or guidance for them. So I hope you enjoyed this PPT and I wish all a happy learning and stay healthy, stay happy. So bye for now. Thank you.